Hey everybody, it is Chuck Barone on Tuesday, May the 28th, 2004, back from the long Memorial Day weekend. I hope everybody had a great weekend. Got away from the madness for a few days because it didn't take long today to pick it right back up where we left off yesterday. We have the weirdest, it's just a paradox right now where it's like good is bad, bad is good, people cheering things they ordinarily don't, people disappointed in things they ordinarily aren't. It's madness right now, guys. But these markets, today we got consumer confidence numbers, and that plus a funky treasury auction, which was not very successful. They actually had to raise rates at the auction and still left dealers with a shit ton of bonds that they couldn't sell. Not a good thing. Hey guys, happening in the bond market right now. And as the US is forced, because of the way we spend money and borrow money, as we're forced to continue to hold these auctions, continue, billions and billions and billions and billions and billions of dollars. These auctions are going to continue to get weaker and weaker until they find a rate that'll satisfy these investors. And I'm afraid that rate is going to be higher than it is right now. We'll see. And that's long-term rates. Fed's going to be dealing with short-term rates over here. All right, so let's talk about these markets today. As I said, consumer confidence numbers surprising in the market. They didn't really come in early. NVIDIA leads the NASDAQ. We had some Fed yo-yos out, Waller, cash and carry, talking rate cuts down, talking about needing to see many, many months more of good inflation data. Well, many, many months more. No, we need a couple of months of good would be good. Not many more of what we've been getting. Anyway, markets today kind of really mixed. You had the Dow Jones drops 216 points, 38,852 on the Dow. The NASDAQ at the same time jumps 99 points. New world record for the NASDAQ. First time over 17,019 points for the NASDAQ. The S&P ekes out a small gain, up 1 point, 5,306 for the S&P 500. So there you have it. Most of the market was basically elevate. How's my man Tommy? Anyway, market's mixed. You have the classy stocks, the good blue chips down. You had the NASDAQ led by NVIDIA up pretty nicely, and the broader market basically flat. So it was kind of a weird day in the stock market. The bond market, however, not a good day. As I was telling you guys, this treasury auction, 10-year notes, 5 years, not good results. So the longer term rates spiking, the 10-year up 7 basis points, 4.54%, back up, closing in, back above 4.5, closing down. You're going to see this rate go up a little bit higher. The 2-year only up 3 basis points, so the shorter term didn't jump as much, sitting at 4.97%. You're going to see that 2-year above 5% soon. The dollar today, not much today. The index moves 1 basis point, 104.59 on the index, so the dollar basically flat today. Precious metals, though, gold and silver rallied up. Gold up $7, $2,358.70 for an ounce of gold. Silver up 35 cents, $31.97 for an ounce of silver. Both good solid numbers. I was hoping we would see $2,500 gold by now. There's some resistance in there and a lot of maneuvering going around. These are the bigger players. Silver, the small guy game. Silver rises and is going to continue to rise. Remember, guys, the bull market in precious metals has been going on for a little while, but it's still closer to the beginning than it is to the end. So there's still plenty of room for growth in gold and silver. Oil really jumps today, up $2.43, back up over $80 a barrel, $80.15 for a barrel of West Texas Intermediate. They're talking about OPEC. They got their big meeting coming up this weekend. It'll be a lot of this, but not a lot of anything else. They're talking about OPEC probably going to have to cut production as much as people talk about OPEC cutting production, they hate it. You got $80 a barrel. You're talking cutting millions of dollars or millions of barrels. Well, that adds up to real money pretty quick. So it'll be interesting to see what that turns out to be. But we could get another spike in oil depending on what OPEC does. Bitcoin today falls down, last I saw, $1,049, but still sitting very high at $68,350 for Bitcoin. A good, strong number. I was reading a Barone's article today. 4 reasons more why Bitcoin will continue to rise. It looks like, this train is not completely done. It's just hitting some serious resistance at 70,000, having trouble getting above and staying above 70,000, but it will eventually break out, believe it. All right, so like I do the first of every week, usually on Mondays, but with the holiday, talk about the data we're going to get this week. It's going to be really loaded to the back end of the week. Today we got consumer confidence numbers. The number was expected to go down, and we're going to talk about that in detail. Tomorrow we'll get mortgage bankers. That's expected to be down pretty dramatically, both refis and purchase business. Thursday, big day Thursday, we're going to get GDP for the first quarter. We're going to get jobless claims, expecting 218,000 versus the 215 we got last week. GDP expected to come in at plus 1.2% for the first quarter. On Friday, that's the big day. That's inflation day. Friday, we'll get the PCE number, expected to come in unchanged from last month, 3.7%. Consumer spend, 2.7%, I'm sorry. Consumer spending also expected to be down. Consumer income also expected to be down. And the Chicago Purchase Managers Index. Interesting stuff, because that is expected to be up bigly. I guess, purchasing manufacturers actually spending some money. So we'll see how that looks, all of that on Friday. All right, so let's talk about this consumer confidence number, guys. Really, really weird. Hey, big smoke on. Wolf, how you guys doing? All right, so consumer confidence, we get the number today, comes in, huge surprise. Jumped from 97.5 last month to 102 this month. So consumer confidence really takes a big jump. Economists expected the number to come in at 96. So they were expecting it to be down 1.5 points, not up 4.5. That is a very, very big miss for economists. Now, I got to tell you, if I was an economist, now I don't look at all the same data they do. I'm kind of limited with the data I get. But I would have been probably wagering that consumer confidence would have been down as well. Consumers were very positive about the job market. They said that less than 15% of the people polled said that jobs were hard to get. So people feel like if they want to make a change, people are looking for jobs, they're out there. Unemployment has been under 4% for 27 consecutive months. That is the longest streak under 4% in more than 50 years. Okay, so they got a reason to look at that and be, I guess, looking back, it's been great. Looking forward, how is that going to go? How are the next 27 months going to go? Also satisfied with wage growth. They feel like wages are growing faster than inflation. Depends on what you do, I guess. Consumers polled also said food and grocery prices had the greatest impact on their view of the economy. Well, that's really kind of a weird paradox there, because I'm guessing most people are not really excited about the cost of groceries. If that had the biggest impact on their view of the economy, it's pretty surprising that the index was up so high, right? Kind of a weird thing there. Poll said inflation expectations for the next 12 months ticked up to 5.4% from 5.3 last month. Check that out, guys. So they're expecting inflation to be more than 5% over the next 12 months, showing a slight raise, just like with the inflation rate, showing a slight rise they believe is coming in interest rates. So consumers feeling like rates are going to go up before they go down. Very strange seeing those two things in there and seeing it jumping so high like it did. It's very, very weird, right? Stock market, of course, the stock market breaking records. Lots of positive news. The people that are watching regular media, getting tons of, straight pumped into their brain how great everything is right now. So that really helped people looking at their statements, looking at their 401ks, seeing those numbers, a lot of them record highs. They said right now, more 401k millionaires than any time in our history. So that's helping consumers feel a little bit better about things too, right? Stock market, they expect stocks to continue to rise over the next 12 months. Again, looking back, it's been awesome. You really think you're going to get 12 more months of a rally? I got my doubts. Now, to go to the title here, okay, so all of this stuff, numbers coming in, people feeling good about the economy, feeling good about wages, not so happy about, inflation or grocery store prices, but still feeling like overall the situation is good. My question then is, why is everybody so freaking angry, guys? I mean, there is so much hostility out there. The slightest, even the smallest inconvenience makes people just go off, man. Yeah, I saw it in the supermarket, a guy trying to cut ahead, people freaking out. You see it on the roads every day driving. You see it everywhere, hostility and anger, people rude, people just saying the craziest stuff to strangers. You read about it, you see violence. It doesn't work, doesn't match, right? So consumer confidence, typically when consumer confidence is high, when people are feeling good about the economy, when they're feeling good about the way things are going in their world, they're not full of anger and hostility, are they? Now, a lot of people point to politics, and our politics is pretty disgusting right now, where anybody that disagrees with you has to be the enemy and hates the country and whatever the term, they both go back and forth with their freaking bullshit. That's why I hate them all, guys. Because the whole idea of politics lately is not to unite us and bring a consensus of what can we do moving forward? How can we compromise? What is your number one priority? What do you want to do? Here's our number one priority. How can we get them both done? None of that anymore. Now it's just fight, war, battle, badmouth, fight, in the vilest of terms, guys. And the people pointing to politics, but I tell you this, man, politics may be divisive and people are certainly consumed with it now more than they ever have been. But it still goes against the grain of this economic stuff. Even if people are pissed off politically, or they're pissed off at the president, they're mad at the political party or whatever it is, when things are going good for people economically, that doesn't have the same amount of weight it typically would have, right? So I have my doubts about some of the stuff in this consumer confidence story today. I think when things really get going well in this country, you're going to see a lot less of the divisiveness and a lot less of the anger and hostility we're seeing in our society today, right? You see this one, guys, listen to some of this stuff, right? The SMI, or the S&P PMI, Purchasing Managers Index, which is going to set the stage for the Chicago PMI, came out at a 25-month high today. I didn't get much details on that yet. I'll get into that, and hopefully we'll have a little something about that tomorrow. But that sets the stage for the Chicago PMI. The purchasing managers are the people that do the buying and purchasing for businesses, right? So apparently business purchasing is going to continue to go up. That was really interesting. You had Waller and Cash and Carry today out saying many more months of good data before they're in the mood to cut rates. Treasuries, I've talked about that a little bit already. The auctions, guys, if you have a couple of seconds, get into the Google and check that out, because it really was a bad auction. We've had like now 3 or 4 of these over the past few weeks. Not good news when the Treasury is going to be in that bond market pretty much every single week to the tune of billions and billions and billions and billions and billions of dollars. It's going to be bananas. Worldwide debt. Listen to this, guys. Worldwide debt. This is governments worldwide, consumers worldwide. Ready for this number? $315 trillion freaking dollars. That's what everybody across the globe owes. Every government in debt, every business in debt, every consumer in debt, everywhere, everybody in debt up the eye to their eyeballs. Listen to this, guys. Global GDP for the year, 109.5 trillion. So now you have debt, global debt, almost three times global GDP. What could possibly go wrong, man? I got to see ultimately which is going to be the straw that breaks the camel's back on this colossal, mammoth, disgusting debt bubble. But something's going to do it. And 315 trillion freaking dollars. Bananas. Just bananas. And to wrap it up, did you see? Now, I've been telling you guys, when you hear the word soft landing, picture the Hindenburg. I thought I was being pretty clever there with my analogy, but listen to this. I was reading today this Hindenburg omen. Have you guys ever heard of this one? The Hindenburg omen? It was triggered last week. Now, this is an index that uses 52-week highs, 52-week lows, and the ratios to figure it out, blah, 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 to predict what's going to happen going forward, right? Last week was triggered. This thing, now, it's not super reliable, not as comfortably reliable as, say, the inverted yield curve or some other indicators of, big stock market collapses. But this Hindenburg omen correctly predicted 1987 crash, 2001 crash, 2008 crash. Well, I would say that that's not a bad track record over this millennia we started here. So we'll see if this Hindenburg omen is actually a foreshadowing of the shit hitting the fan on the stock market, because, guys, what goes up must come down. These are pretty lofty prices. I've told you guys about PE ratios. I know that that's not something that's so much in favor anymore, but it's still a great indicator of how expensive prices are. And when you're seeing PEs in the 30s, guys, that is, you're selling every dollar they earn, the stock is selling for $30. That might be a little bit too far, depending on how fast that company is growing. And S&P stocks, those are not the high flyers you're going to see in the NASDAQ. So fascinating, crazy ass times. Now, here's some predictions for this week. I really think that we're going to get good inflation numbers. I think they're going to figure out a way to get those inflation numbers to do well this week. I think PCE will come in. That'll give a little bit of breathing room to the market to consider rate cuts. Most people now not factoring in any rate cuts, at least the market not, until November or December. So I've been proven right there. I've been telling you guys all along, we're lucky if we get one in December. So it's going to be some fascinating stuff this week. I think it's going to be one of those weird weeks where we get nothing but good news. I think we're going to get GDP. It's going to be okay. I think jobless is going to come in pretty solid. I think PCE is going to come in pretty solid. I think they're going to get a number that's not going to spook the bond market. I think that consumer spending, we saw retail sales. So it'll be interesting to see how consumer spending works with those retail sales, which completely wiped out. Consumer income not going up as fast, but still going up. And we'll see what that Chicago Purchasing Managers Index says on Friday as well. Anyway, guys, that's it for the day. I love everybody. I appreciate all of your guys' support. Nice to see everybody on the chat here. We got Zoot. We got Attila, of course, my man. He's there every day. Wolf on. We're salty, guys. Big Smoke. I don't see a few regulars not on today. But, hey, it's a Tuesday. Everybody kind of recovering. Hey, there's Ghazi. Everybody recovering from the 3-day holiday. We may not be as busy today as we have been, but we will be back tomorrow to bring you guys the news you need. Please, guys, hit the thumbs up, hit that like button. It changes the algorithm around. I will be on the comments today. Hit me up with questions. In the meantime, guys, have a great evening. We'll be back tomorrow to bring you the news you need. Until then, guys, take care. Thanks.